Hi dear traders! In response to the hawkish speech of the Fed's chairman at the symposium in Jackson Hole, the US stock market is still overwhelmed by massive selling. However, sentiment has changed in the currency market. The US dollar is losing ground against the single European currency in light of the remarks from some ECB policymakers. They dropped a hint that the ECB is ready to raise the key interest rate by 50 or even 75 basis points at the next meeting. The nearest policy meeting is scheduled for next Thursday on September 8. Meanwhile, let's discuss what other events are taking place in the last 2 days of the trading week. Make sure you do not miss this crucial economic data. On September 1st, market participants will be able to evaluate trends in the global economy. In the early trading hours, traders will observe the CAIXIN manufacturing PMI for Chinese small and medium-sized factories. The forecast is gloomy. Business activity is waning due to soaring global inflation, which forces central banks to raise interest rates. In turn, tighter economic conditions make a dent in consumer activity worldwide. Demand remains sluggish even despite the fact that China offers its merchandise at lower prices. The negative trend in the world's second largest economy will dampen the appetite for risk across global financial market. Risk aversion is bearish for the Australian dollar. During the European session, market participants will get to know revised PMIs for the major European economies. Interestingly, the preliminary readings will slightly better than in the consensus, but still revealed negative dynamics. The final PMIs are likely to coincide with the flash readings. Later in the trading day, the Institute for Supply Management will unveil the US manufacturing PMI. Amid the signs of the looming recession, the index for July dropped to the weakest level since June 2020 during the pandemic. Nevertheless, economists underscore the optimistic sentiment among American manufacturers. It assures investors that the US economy is able to cope with the ongoing headwinds and resume its confident recovery. In fact, there is more important data that will absorb investors' attention at the end of the week. Commonly, in the first days every month, traders anticipate fresh government information on the US labor market. The Federal Reserve considers this data the most accurate barometer of the health and strength of the US economy. On Thursday, the US Labor Department is due to publish a weekly update on unemployment claims. On Friday, the market will digest the official US NONFARM payrolls for August. The employment growth for July was unexpectedly stronger than in forecast. The most robust hiring was recorded in the travel and hospitality industry. Analysts foresee high employment growth in August with 300,000 jobs. Let me remind you that the normal employment growth for the US economy is viewed as 200,000–250,000 jobs per month. The jobless rate is expected to remain flat at 3.5% last month. In July, it declined to the lowest level since February 2020. Besides, analysts project further positive changes in average hourly earnings. All the above-said criteria are certainly weighty arguments for the Federal Reserve to go ahead with its aggressive monetary policy. Such prospects will invite dollar bulls back to the market. Hence, the US dollar is set to flex its muscles against other currencies. Such events will be in the limelight among investors at the end of this trading week. Don't miss our daily news reports to be always in touch with the latest news. See you soon.